are some of the broad trends that people are, they look out on the horizon that they have to pay attention to?
Great. Yeah, we're seeing a lot of excitement in the industry, actually. We're seeing a lot of individuals and employers finally looking at some of the new alternative ways of offering health insurance. We've always had the traditional group plan where the employer sponsors one specific plan, maybe a couple different type of options for the employees. But now what we're starting to see is employers evaluate whether it just is an easier way of offering a flat sum to the employee and allowing the employee to shop for their own benefits. We're also seeing a big transition in the small group space, migrating over to a new type of plan called level funded plans. And in level funded plans, what that is it's really an employer taking on the same amount of risk as if they were on their traditional fully insured plan, but the employer has the opportunity to actually collect some of their reserve bucket at the end of the year, should their claims be lower than expected. So it's a great opportunity for small businesses in order to collect additional money at the end of the year if they continue to be a healthy group. And then for those larger groups, we're still seeing that transition from those that are moving from the level funded space or the fully insured space into self-insurance. Self-insurance is a great way to save additional taxes for those companies, and it's a great way to manage their risk moving forward. So those are the main changes that we're seeing in the marketplace for 2023.
Without asking you a CPA question, what are the tax advantages for a small business to be self-funded?
Some of the tax advantages are there's really a lower state tax in regards to the benefits. Also with self-funding, the employers that offer self-funding have the ability to really customize their plan designs a little bit more. Oftentimes we see certain network savings when they can choose a more comprehensive network, but also at some savings. And then some of the additional ACA taxes as well are also removed from the self-insured.
What would be the kind of decision, what would be the calculus that a small business would use if they were to think about being self-funded versus being in a more traditional?
Really, we want to focus on claims. So when it comes down to it, a good group to try self-insurance is a group that has relatively low risk. The risk can change. We know it can change each and every year. We're able to work with that group to monitor and manage that risk even on a more frequent basis than even annually. We often create reports on a biannual basis where we can tell them how they're trending, if self-insurance will continue to be a good option for them. But really groups that have more employees, traditionally over 50, it really should be 50 or more employees that have relatively good risk are great candidates for the full self-insurance.
So in other words, if you ran an advertising agency with people under 25 and they were all mountain bikers, well, actually that would be low risk. That would be high risk.
That'd be high risk.
Yes.
But they basically have vegetarian diets and watch television a lot. In other words, lower risk. Maybe you should take a look at self-funding as an interesting option for you to pursue.
Absolutely, any group with lower risk. Now, that's where the level funded plans tend to come into play. They're treated more like a hybrid where from the employer has a set budget. And with that set budget, the employer knows what their liabilities are for the entire year. On the level funded chassis, it's technically underwritten as a self-insured plan, but it gives the employer some of those protections of knowing what their claims are for the entire year. It also allows the employer to have the opportunity to receive some of the money that they paid in back at the end of the year. And if it's a healthy group, oftentimes because these plans are underwritten, we can actually get better, more competitive rates than the fully insured marketplace. So for most employers that have 20 or more employees, what we find is that level funded really checks those boxes. If it's a healthy group, they're going to, number one, get lower rates to start, and then also have the ability to earn some money on the back end should their group continue to be healthy at the end of the year.
And who doesn't like choice and options? And again, that's, I think, is a big strength of ours is we're not just going to be limiting them to one insurance company or one product type. It's an education process. We're going to, again, match that policy to fit the personality of your business.